biggest takeaways really is be prepared, have the right data in, but also have the right relationships. Invest in your relationship building very early. So you're attending events like this, you're already making an investment into your future. So you're looking, okay, can I speak to the person I might need 6 months, a year down the line, and not just when you run out of cash. I think that's the utmost importance. Build these relationships early. That's the room we built for this. And the Capital for Cure series is the right format for you to attend and to meet your next partner. For me, it was really, I think also the reality is where you go in as an investor is you almost assume the company doesn't work. So how do you protect your downside? But also how do you work them with a founder with that in mind? And also is, I think, startups getting more sophisticated, but sometimes an investor is not an investor. It's a segmentation we really see. We see family office, we see venture capital, we see royalty financing, we see the traditional IPO, and this is really being prepared. Understand the other side as well. And this is what we really invest in with the series as well, as we want to educate people, bring that knowledge as well, that you come prepared, you have all the data ready, you have your data room ready, you have all the documents in, you're the smartest person in the room with the investor.
Yeah, I think I agree with you. There were two things that were kept surfacing. One is really the difference between innovation and capital. I feel like we do have great assets in Europe. However, the risk profile doesn't really match, the risk profile of the LPs and GPs. On the other side, it's really a little bit about like the deals. Investors are looking for quick due diligence, and I feel like maybe the companies are not ready for quick due diligence. Therefore, there is a real technological gap, and this is what we try to solve here at SS&C Intralinks.
Absolutely, and this is, I think, again, being prepared, and also where most of the deals, most of the capital still originates in the US. So we have a lack of follow-on capital in Europe, and that's definitely something we also try to bridge here. It's like there are investors, you just have to talk to them. We have to find them. We have to bring them to the room. And it's not over a Zoom call. A lot of people think it's still Zoom, Teams calls, whatever you use. But it's being in the room. And that's why we also build that room for these people to meet. So they have a face to the name. And also the conversation might take a year to really see, okay, in a year, are we ready? Do we have all the data in? Can we ask these questions in the interim? Can we make sure that the company is prepared, that you have that? And I think that is really important, that preparation. We see a lot of multi-billion-dollar deals every week, even. So it's $5 billion plus deals with upfronts, so-called biobucks, where we have huge upfronts, but the actuals are a bit smaller. But you definitely see more assets being in-licensed in China. But also with the current political climate, there's definitely an issue also how to get that. It still will take time until they come to market. But also, I think the money is there. You just have to be prepared as a company. Also to match that sophistication of the investor.
So can we say that it's selective and strategic?
Absolutely. So you have definitely big companies trying to refill their pipelines. We've seen shifts. Also, there have been hypes. We had the GLP-1s, the weight loss drugs. This is definitely a hype cycle that is now a bit ebbing. But also we still have other asset classes like ADCs. They are still big. So we definitely see that is strategic capital, as you said, is the replenishing of pipelines, but also then taking truly novel targets. That still takes a lot of patient capital.
Yeah, I think we are fortunate enough to work on most of them and the transactions globally. And we can say that the volume did not go back to the peak. However, there are great assets out there. There is an enormous pressure on large pharma. Basically, we can say the patent cliff is not anymore a forecast. It's here. In reality, I have read like last days the news that basically by 2030 we are talking about something around 300 billion revenue loss, and 100 billion is coming from the big pharmas, from the patent cliff. On the other side, when we look at financing, I feel it's a good environment. Companies with clear strategy, clear way how to go to market are getting funded, and earlier stage companies, maybe not with differentiated medicine, are still suffering, which is a good and normal pace of the market.
What we see definitely is we have more private equity moving in. So we see more capital. When I speak to fund managers, to asset managers, they tell me it's not that hard to raise money, it's to deploy it. That's the real challenge, that deployment, finding these good deals. And that's definitely why we see more bigger rounds. So we've seen this now with royalty financing, for example. We've seen billion-dollar deals. We've seen financial structures. We've seen bonds. We've seen credit notes. We've seen a lot of financial engineering. And that's where you really see private equity players like the huge ones, they're moving in. And it will stay. It's always in biotech you have risk, right? So it's binary. It's either 1 or 0. So the drug works or doesn't work. So you always have to account for that. And that is sometimes where you have a lot of competition in phase 3 or even approved drugs, where everybody wants to be. And we have less and less capital really in the earlier stages. And I think with a challenge to public funding, there's a lot of universities that I've seen also in the US, also in Europe, that now try to say, okay, we can do this ourselves. We can raise the finance. We mentioned pension funds. They have done deals now. There's especially North America. We have pension funds. They're doing all these deals. So we're getting them in. They're doing it themselves. They don't rely on an asset manager or a broker. So they're getting also more sophisticated. I think that's really an evolution of financing as well.
Actually, just to summarize, there are a lot of components. However, we can still say that preparation is underestimated. I have seen deals fall apart not because investors are actually not believing in a company or in a science. However, rather because the questions could not have been answered on time. So I feel like a little bit like investors are losing faith not in the assets because of valuation gap, but because of the team being able to deliver. And that's a real thing still in 2026.
Absolutely. And this is also the aim of the Capital for Cure series that we started 2 years ago. So it's really also bring the room together for people to understand this. How do you talk to an investor? What is their motivation? What do they need to execute that deal? Because sometimes people come too late. They have 6 weeks cash flow or maybe a couple of months. And then they come and want to raise money. That's not how it works. Because a deal typically takes anywhere between 6 to 12 months to put together. And I think that is really be prepared early on. And this is a conversation you might have had in Amsterdam, in Paris, in London, in Basel, might pay off in a year because you met that person in the room that you wouldn't have met otherwise. Because the big events, you go to Bio, you go to JP Morgan, all these bigger conferences, there's 20,000 people. How do you find the right person? You have 50 minutes with an investor versus our more bespoke events. We can bring them in a room for 3-4 hours. They can sit down with someone, have a conversation, and really focus on that. There's a lot of events, and also it's important everybody's conservative with the time, but I think what we're really special in is we bring people in the room that wouldn't otherwise meet. And also that is important because you would have a hard time reaching them out or they wouldn't answer you. And this is why we really create these forums. We've done this for the past 2 years. And I think this is really why they come to our events. That's the feedback we get all the time. I wouldn't have met that person if I wouldn't have gone to your event. That's the best feedback for me. That's really what we try to do. Yeah?
I see. So life science forums at SS&C Intralinks are also important because we feel like that this industry is moving on relationships and not just the cold outreach. So for example, the deals that are getting done in 2026, conversations started in 2024 and they started being prepared in 2025. So these events actually amplifies and make things quicker.
And that's exactly the point. So we always try to be also next to bigger events. So we also have that, and then we have people in the area, and we're making sure that we also attract people that maybe wouldn't have gone to the event. So we have all the people in the room, and we can really connect them, and that's the part we play. We are a connector, and also making sure that they can then meet in a smaller format, again, more curated, more bespoke. We're very careful curating our guest list, that we get the right audience mix, and that's what we're very proud of. Over 1/3 of our attendees are usually investors. I think that's a ratio most biotech and most healthcare events would dream of. And that's really what we worked hard over the past years to achieve that. And that's the speakers we bring in, that's the venues we have, and also the audience we have. Because they really like that and come back and also remember us and also remember partners like you with Intralinks. It's like, okay, we can trust them and also we can work with them and we know who to talk to. I think it's really 2 separate concepts. So Paris, we really bring in a small investor breakfast meeting. We have a really high exposure of investment banks, of public LPs, limited partners, from European institutions. And that is, I think, really the room is that they wouldn't have otherwise. So we have really big companies. We have also an investment banking side. They typically don't talk, or they talk in a sales pitch.
Yes.
And that's the benefit, I think. We're really curating this in a format where we can bring them together. Whereas in Amsterdam, of course, we focus a little bit more on health tech, med tech, often overlooked. So I think that is also important to bridge that gap because investors also become more agnostic. They think healthcare, they might have done only pharma, but they might increasingly also do health plus tech. So it would be medication with a companion diagnostics. So the traditional investor lines really are blurring. And that's, I think, very at the forefront really here. We can bring them together in the room already and see, hey, we can already do this. And I think that's the importance here.
Yeah, I feel like that Paris really gives us a different access. Sometimes it's a little bit like overlooked on the traditional like pharma and biotech. And when it comes to Basel, I think that's very straightforward. Is one of the heart of pharma in Europe, and I feel like it's not just about like traditional M&A. We are going there definitely also to build long-term relationship and partnerships.